Good, welcome back to AIM. Lovely to have you with us on this Thursday morning, 22 minutes after 6 o'clock. Now, Amazon, it's known for being the world-dominating e-commerce giant, but where do most of their profits come from? Most of our interactions come from ordering bits and bobs online, but most of their money is made in the online cloud space, Amazon Web Services. Joining us now is Milford Asset Management Senior Analyst Stephanie Batchelor to talk about Amazon, because it is a behemoth of a company, right? And when I was in the UK, people just used Amazon to buy everything, like the Epic online network. Then they've got Amazon Prime Video, because they came here and they made Lord of the Rings and then buggered off. And they've also got Amazon Web Services as well. Given the current climate, are people still using the Amazon to buy stuff, the online store? How is that faring, particularly in its home country of the US?
Yeah, so we are hearing a lot of anecdotes from the US about the consumer being under pressure, particularly that lower income consumer who's really feeling the squeeze from high inflation and interest rates. Amazon in its most recent quarterly earnings actually said customers are shopping, but they are cautious. So they're really looking for cheaper prices, and they're looking for deals, really. And if we think about Amazon, its e-commerce business has been a bit up and down over the last few years. 2020, it was COVID, everyone shifted online, great year for Amazon. Then 2022, the world opened up, so things were a bit weaker as people actually wanted to spend in person. And then the last year and this year, we're looking at about 10% e-commerce growth. And so that's lower than pre-COVID, because it's obviously online shopping's more mature now, but it's still a healthy growth rate.
That is decent. Given that people are trying to find lots of bargains, are they now going, well, let's look to China? Because China's got a few of these Amazon wannabes, like your Alibabas and your Temus and your Sheins. Yep. Are they doing that? They're moving over there?
Yeah, it's an interesting dynamic at the moment, because the local Chinese market is quite saturated, it's very competitive, and the Chinese consumer is also weak at the moment. These Chinese e-commerce companies are starting to shift globally and starting to kind of encroach on Amazon's territory. So, for example, Temu launched in the US and New Zealand about 1 or 2 years ago, and so they sell a huge range of unbranded Chinese goods for incredibly low prices, and they offer free shipping. So they've said that they are planning for sales to triple this year to $60 billion. And then Shein, so a private Chinese company that sells fast fashion, they're already bigger than Zara, and they're planning to grow 40% this year. So they're both seeing incredible growth. And if we think about the volumes that they're putting out, it's about 9,000 tonnes that they send every day, which is the equivalent of 88 Boeing 777s filled to the brim.
Wow.
So it's so large that it's actually having upward pressure on shipping rates. But they're still a lot smaller than Amazon, and the product quality is arguably lower. So for now, they're just nibbling around the edges of Amazon, but it's something that Amazon and other US retailers are watching closely.
Yeah, fast fashion, full of microplastics. Now, you talked about Amazon growing at 10% at the moment. That's still pretty good, I think. How are their shares performing?
Yeah, so shares have actually been very strong. Even though e-commerce growth rates have slowed to around that 10% mark, 75% of revenue from Amazon is from e-commerce, but it's actually only 25% of profits. So what actually drives Amazon's bottom line is AWS, or their cloud computing. So that's essentially on-demand computing delivered over the internet, and it does away with the need for hardware, storage, software, all of those things that take time and money to set up. So they've seen very strong growth as companies continue to digitalise and shift to the cloud. And then we also have advertising. So this is a newer business for Amazon. They've only been in it for about 5 years, but already it's almost a $50 billion business, and that's a very high margin revenue stream, so it drops through to the bottom line. So even though e-commerce is slower than it has been, these other two businesses are really driving Amazon's profits.
Are they going to start delving into AI, artificial intelligence?
Yeah, so with cloud, AI is obviously a big topic, and the new and exciting piece of AI is generative AI, or Gen AI, and it effectively, the difference is that it generates new content rather than just analysing the data that's already there. And it's expected to grow at about 32% per year. And then over time, it's actually expected that 90% of the data that we see online will have been created by Gen AI, not us. So in their recent quarterly result, Amazon said they're seeing considerable momentum in Gen AI, and they're now at a multi-billion-dollar revenue run rate. So it's still early days, though.
Yeah. Okay.
Yeah.
Well, it makes money. Still terrifies me, but it's obviously making money for Amazon. We've got to leave it there, Stephanie. Thank you very much for coming in. It's an interesting company, isn't it, Amazon? That is Milford Asset Management Senior Analyst Stephanie Batchelor. And we're talking business every single Tuesday and every single Thursday, thanks to our friends at Milford.